Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market quickly and then try to plan something for the next day, a better trade plan for the next day, right? And this is an analysis for April 6th, Wednesday, 2022. So wasting time, let's get into the action. So market analysis will be based on all these parameters that you see here, right? Candlesticks, price action, Bollinger Bands, all of this, right? You would have some data analysis based on open interest data and things, and global commodities data also you'll look at, and then wrap up some action. Sorry, this is April 6th, Wednesday, 2022. Analysis for that day, right? Okay, next day. Price patterns, yeah. So after a big bullish rally, we can see that there is a pause that this market has taken. Market closed bearish, right? There's a decent bearish candle, right? And BANKNIFTY is even more decent. Or in the sense, BANKNIFTY is even more bigger bearish candle, right? The pullback was real, but still, it's comfortably above the gap supports. We have very good gap support as found when the market moved up yesterday. Here, Nifty also, we have a very good gap support, right? All the moving averages are cleared, right? Still comfortably above multiple good supports down there, right? Let's quickly see the details. How much point we lost, right? 96 points in Nifty, right? And 18k was, it's a psychological rounding number that slipped. It slipped from that on Nifty today, but that should be okay. Like all moving average supports and Fibonacci 61 is all far below down as a support, and BANKNIFTY is lost a little more extra. It's 1.47%, 567 point lost. Still comfortably about all the moving averages. Resistance confluences that are there, and the gap that is cleared is all, it could act as a support downside, and Fibonacci 61 near to that, little below that, is where the close happened today, right? And you can see all the details in this chart, right? So you can see that there's a gap up, breakout from the flag pattern that happened on Nifty, breakout from flag pattern that happened on BANKNIFTY also, and it is a small pause here, 0.5%, and there's a big pause here of 1.45%. It's intraday price action. If you see, this is what happened, right? It moved down, moved up. That's a V shape on one, and then moved again down, causing another inverted V. Same with BANKNIFTY. Moved down first in the morning, then recovered by the beginning of the afternoon, and then it slipped down like so. Double V shape, one inverted V and another V. So that was very volatile. And finally, market lost 0.5% and 1.5%. That's intraday price action. Bollinger Bands, if you see, expansion is still there on the upper bands. It shows bullishness far away from the median. Both expansion is then BANKNIFTY also. Volatility would be there, as we every day point out, because of the distance between the median and the bands, right? So volatile, no upward bias is what Bollinger Bands indicated about the biases. Hanging out of support resistance levels. That is. So this gap that we have, right, would be a very good support. Downside we have another gap which is a very good support, and then further below near 16,450 Fibonacci 50 also retracement level also you have a good support. Three gaps at the comfortably for the Nifty, and so right now the immediate resistance, if you see, is near to the 18,000 levels, where it slipped slightly below that. Then 18,100, 18,200, 18,300, 400. That's a upside. Downside is about to be 17,800, 850. That will be good support. And then below 17,500 to 7,600, Fibonacci 23 retracement will be support. Below that, 350, 400 support, and 200, 300, and then 17,000. BANKNIFTY similarly would have the resistance starting at 38,000, 38,100. That level that has to be maintained, and then below that you have the resistance of 38,500 levels, which it had crossed yesterday, but unfortunately slipped today. So that would be a resistance, major resistance, and above that you have the 39,000 level, which is another resistance, and above that 39,300, 500, then 40,000 that levels, right? That's resistance in the upside. Downside you have 37,700, 800 that zone, and then 37,500 Fibonacci 23 retracement, and then 37,000 nearby range, right? That is where the block of the gap resistance really happened. And below support would be near 37,000 Fibonacci 38 levels, and below that you have 36,000 nearby zones, 35,600, 35,900. That's the support and resistance levels of BANKNIFTY. BANKNIFTY also has its very good support bottom here, unfilled, right? So this gap may act as support, but that is clearly taken away yesterday in the Bank Nifty, right? So that's a flag pattern is the drawing that you see here. That's broken out. Bank Nifty also flag pattern broken out. Momentum, no divergences yet. Momentum is bullish on the side, on the short term, on both the indices, and medium term momentum is sideways but rising and very close to breaking into the bullish zones, right? That's what. So there could be a chance that this momentum that is broken out from the 60 can fall back to 60 and take a support here and then move further up, right? It could also form some divergences here that could give us clear indications on how, whether that's confirmed or not. Probably we have to wait and watch. We know what happens, but or it could again move up. But there is a very good chance that it can dip tomorrow and take support somewhere here, and then it becomes very bullish, because that would be a concept known as a range shift of the momentum, right? There are also similar patterns happening, right? Broken out, taken a pause, then immediate up move, or take a support to sort that down and then take a support. Either of that can happen, right? So that's about the momentum divergence. Trend is bullish in short term on both the indices. The thing is, the medium term also the bullish trend to bullish zones, right? But the weak strength is not that great for the medium term, but on the short term, the bullishness, you can see that the green, the strength of the strength indicator is moving up. The green line is moving up, right? And DMA positive both in short term. Trend is bullish, momentum is bullish. Volatility slightly short of 3.2% today, and then moved into the 18.48 zones. And implied volatility of Nifty is 7.4, IVP is 67.2, cool off from the 99 kind of levels earlier. So which is below 20 is a good thing, right? It was comfortable trading for options, and derivative tradings, but still you have to be cautious whether it is spiking back to the 20 above levels, right? Out in this data, you can see that the range is between 18,000 and resistance also is 18,000, where the highest put in the call writing is. So it means sort of strategy might have been built at that. That's all, right? Option writers might have done, the return the calls and the puts at the same strike 18,000. 17,500 and 18,500 is the next level of put and call writings. Put call ratio is 0.92, which is kind of near very close to the bullish zones on the Nifty. And today it's a short build up that happened. That's where the futures operators built up data. Bank Nifty 36,000 and 38,000 is the range between the highest put and call writings. 38,000 and 39,000 were the second level of put and call writing. Where you can look at the support and resistance levels. 0.88 is where the put call ratio is, which is not bullish enough but very close to bullish zones. Right? Just fallen 1.5% today. So right, the put call ratio is also dipped down. Long unwinding is what the futures operator status is doing. Long unwinding shows that people are long now start thinking to take short positions, right? It's kind of bearish. That's what price action that has happened today. That's what operator analysis is showing, right? So no, some unwinding is seen on the put side, but not much, right? Some call writing has got added up. Looks like on the Bank Nifty side, right? So you have Wednesday tomorrow and day after tomorrow is expiry for the first weekly expiry of April. So so things will be more clear by tomorrow's open interest status. But as of now, this is what the range is. Lot of congestion is happening near the 18,000 levels on the Nifty, and Nifty is trying to maintain the 38,000 kind of levels basically on the Bank Nifty. Look at this, red has come back again. Where HDFC Bank, it might be profit booking that may have happened. It had corrected a lot, and then it was a because of the news driven, both the stocks had moved extremely high, and some profit people have thought of taking the profit. So it has come down. That's what you would assume, right? Even Kodak Bank also moved very well yesterday. Bajaj Finance also. So these stocks had some profit. Those did not do well today also, but TCS and seems to be performing. ITC also performing, but overall, financial services did not do well, which had done extremely well. But obviously because of HDFC. Right? So all other sectors seems to be done pretty much okay. Green, you can see the green except for financial services everywhere. Right? Like say here's HDFC. You can see see a small red after a big mega gap up. Move to the very top and then some pullback, but momentum is bullish, volumes are high, trend is high, right? Same with HDFC also, which is getting merged now. HDFC is also showing momentum bullish, volumes high, trend high, price action, it's a gap up, and today was a bearish close that you can obviously see, but right, nothing has happened at the moment, just a small dip. Lands showing some red today, but that also momentum is taking a support, seems to be near to the RSI 60. So trend is all bullish, everything is bullish there, just taking a pause, right, and before it further moves ahead. It was a down day, showing a red candle with the momentum slipping to the sideways, and yeah, it's very close to the all-time high for the Infosys. So a lot of drama can happen now. Infosys did well, gapped up, means it had a green candle. Momentum has jumped into the bullish zones now, and looks like it's well within a channel, very wide channel. So we have a resistance, far away, but yeah, it looks like it is heading towards that slowly. Right? So it's kind of short-term bullish now, as per the momentum of Tata Consultancy Services (TCS). ICICI Bank also seems to have conquered, but slight red close, but seems to have conquered the major resistance zone and then slowly coming up, but it's resisting below the RSI 60, so it might take some while before it gives a confirmation clear signal that it is now heading further north, right? As soon as the momentum settles above the RSI 60, we'll get a clue. Here there is some bearishness that you see here. Kodak was about to get in the bullish zones, but met with a resistance in the closed red today. Probably profit booking just like HDFC, and that's where it is. It is a good bounce now, back, but long way with multiple resistance ahead before it moves up. Sector performance, IT flat, a lot of flats. Pharma flat, so two flats. Pharma and IT was flat today, 0.6 and 0.15 kind of like. So overall, if you see, metal is only stock that is bullish on more time frames, in the sense that weekly and daily both metal is still bullish, but yeah, today is 0.5% up. IT was flat, kind of nothing happening, but it is very close to the bullish zones, but sideways today. So auto also is sideways. So IT and auto continue to be in sideways, right? We'll have to wait for that to catch up, and metal is bullish. You can still take longs, but with caution. Pharma is also bullish, FMCG also bullish in the short term, Realty also bullish on the short term, but all of these three bullish stocks, Pharma, FMCG and Realty, all have sideways momentum on the medium term, so you may choose to wait, or you can take with tight stop loss, long positions, right, based on the performance. So bullishness is still there in the majority of the sectors, and some sideways movement still remains in the IT and the auto. Otherwise, everything looks heading towards the bullish zones as for the sectoral performance, right? So institutional participation was small buying that happened from both FIs and DIs, but it's a great thing that FIs not sold since last 3-4 days, right? So that's optimistic, and that could be a good signal that we have probably green days ahead. Dollar, yeah, so you can see the USD INR has slipped, has cooled off, and then rupee has strengthened some more and still above 75.75, right? But we are at a support zone at the RSI momentum, so probably it may give, it may be bouncing up from here. That means it is likely that we may remain at the 75 kind of levels, between 75 and 76 kind of levels for long period. So probably not until things cool off on the dollar side. Look at the dollar index. That's what dollar index also kind of consolidating since long time, right? Without jumping into touching the 99.6 levels since long time consolidation that continues today also, right? With a small red color seen on the US dollar index, right? But rupee has slightly strengthened, is what you can see. Global indices, Dow Jones, a green day, but momentum has slipped in the sideways. Yeah, but yeah, it had a very good bounce and it consolidated for 1 or 2 days, and now it has shown a green again. Looks like it may be heading up again. Nasdaq is also, so momentum for this is slipped in the sideways when the dip, some consolidation happened 2 days back, right? So here also the slight slip in the sideways happened on the Nasdaq also, but it seems like it's bouncing up. Even S&P 500 also seems to be bouncing up with momentum. Is in the mid of sideways and bullish zone. So right, it's not it is a small pause of a big bounce up that happened, right? So probably it is taking some breather and before heading further up is what it looks like, right? You have to keep a close watch of this from the pre-market to get a clue on how it could potentially impact our markets, right? Crude oil is again seems to be moving up to above 100 levels, right? Had cooled off below 100 2 days back. So again, but momentum is sideways, thank God. So yeah, it seems to be trying to consolidate at that level, but we can assume that as long as the momentum is in the sideways, once it climbs to the bullish zones again, then we have trouble. Gold also seems to be consolidating at the place where it had had a false breakout and reversal, and the momentum is sideways, and then it may take its own time consolidating at the same spot for a long time before breaking out once again and attempting to take out that all-time high. Two actionables. Tata Power seems to have broken out, but make an entry now only above a price that goes above this candle high. Then that may be a good call with tight stop loss on this rectangle pattern neckline. No, the not neckline, the top part of that would be the stop loss. Right, 267.44 as major resistance. Previous resistance which was taken out only today with the green close above that. Just have to see that sustains the next day also. Volumes are good, momentum is bullish, so power stocks are all doing good. Tata Power extreme move, 8% or something has happened today. ITC also has broken out and it has given a good move today. Volumes are high. Price pattern is a breakout from a channel. Momentum is having divergence, right? It's bullish and it is halfway. It still could move further up towards the resistance on the 267 kind of levels. It could be possible, right? Momentum trend, volumes, that price pattern all are bullish on ITC. But remember, it will give a small trade only because the resistance could act as a resistance. And it may take a pause, it may take 6 months time before moving on. But yeah, our bullishness is clearly evident on the ITC and Tata Power. Wrap up, moderate bullishness might be for tomorrow. Reasons are the same that was mentioned yesterday. Yesterday also the view was actually moderate bullish, but it was known that there could be a pause that can happen, small rest before taking the next up move. That's exactly what happened today. But all the view remains that it was moderate bullish, although we had a bearish day today. Right? That remains the same view from today also. It could be possible that market may decide to settle the moment a little more at the RSI 60 levels and then move up. So probably first half itself may achieve that and then move up, or it could finish off with the rest that happened today and then further take the up move. But yeah, short term moderate bullishness because of the momentum, because of the trend, because of the Bollinger Bands, because of the support resistance levels down, clearing all this price patterns, everything together. Market 15-20% recovery happened in just 3 weeks, and that's good thing. Good supports down there. FIs are buying, fixes cooled off, all moving average resistance conferences are cleared. Only concern is crude and dollars. I think so. We have that 17,500 to 37,500 level. As long as that is maintained there, and we don't slip below the 200 moving average again, then the next zone would be 18,350 kind of zones, right? So basically, we discussed this yesterday also. Just quickly. So this level is a swing high. So this 18,300 swing high, that level has to be taken out. Similarly, we have a swing high here also. Right, that's near to the 39,000 kind of levels. This swing high has to be taken out. It has to move above that. Then we can have a price action which is not making a lower high. That pattern would be broken once this is taken out. So that would be the next area to watch out for, 39,000 nearby levels and then 18,350 nearby levels, right? So the first target would be that we had 17,500 and 37,500 clear, which was also a great thing, right? So warranties stocks, all these things has not settled fully, so volatility can spike back above 20 levels anytime. You have to be cautious. But as far as they're not selling, at least, although the buying was very less. Positive factor is that it's a 15%, not 12%, 15% of up has happened just a matter of weeks. Cooled off, everything is in favor of FIs, right? So yeah, but you have to still be cautious because there is a lot of bad news that may be floating around and that can wipe out your profits in overnight action that can happen. So always hedge your positions with risk-defined strategies, on-direction strategies, or counter spreads or critical spreads and all these things, right? And intraday volatility, today we had two V shapes. Right? It's very difficult to trade for intraday, but unless and until you understand how the chart patterns work and then how to trade your stop losses, right? And position size correctly, right? So that's a wrap up. The moderation bullish will continue for this tomorrow and the short term. I hope this helps you to frame your view on the market and trade plan for the next week. That helps you in some way. Consider hitting the like button and share it to your friends, colleagues, We have very few subscriptions. Appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. Bye.